Welcome to Everything Money. We're glad you joined us. If this is the first time you've found us, we welcome you in. I ask your viewer normal person questions to a couple wealthy guys who trade a lot of stocks, a lot of money, have a lot of real estate. And today we're doing a blind stock analysis. We've been teaching on the show for 3 years now that you need to start taking emotion out of this game of investing and not following hype. Probably not even watching YouTube experts. Paul, you always say if a lot of people are talking about a stock, it's probably overhyped, overpriced, and you should be avoiding it. So today we're going to look at a stock without even knowing what company it is, because we want to look at the financials first and then translate that into the ticker price. If you've been buying in the past just based on ticker prices and hoping that your Netflix, your Tesla, your Bitcoin just goes up, and then when you find out it doesn't, you might be wondering why. We will show you what you should be looking at first. We will head over to Mo, Handsome Mo, and he will look at see if you want to trade this in a quicker manner. We have a Bidnast Nation in our community that trades with Mo on a daily basis. We will get to all of this right now. But first, Paul, give us your thoughts. You looked at this chart. You said, wow. You started looking at some interesting...
I didn't look at the chart and say that. I saw the financials.
Oh, okay. Go ahead. Tell us your thoughts.
First off, follow us on Instagram. It helps our egos out a lot. So the things I like, 5-year PE lower than 22.5. That's very good. Healthy margins. You've got a return on invested capital that's high. Got a lower price to sales ratio. Now, the only thing I didn't like is the 5-year average free cash flow is higher than last year's free cash flow. Wow, 3.2% dividend and only eats up like a third or 40% of its free cash flow. That's pretty solid. So far, I think it's a software business or some sort of tech business of some sort.
Okay.
$122 billion market cap. So that's my initial gut reaction to it.
So right off the jump, a low PE means it's not incredibly overpriced at the moment. You know, it's kind of an
well, the 1-year PE is 21, which is a little high, but the 5-year is 19.4.
Nice profit margin, return on invested capital.
Yep.
So far, so good.
Yep.
These are the incomes. Our pillar number 3, folks, is revenue growth over the past 5 years.
Nice and steady. 22 to 24. Okay, that's the revenue growth.
22 to 24.
Actually, revenue total is down here. 23 to 25. Go ahead.
Okay. And then now we go to pillar number 4, folks. This is profit growth over the past 5 years.
It's down 8 billion down to 5.75. So as soon as I see like that kind of thing happening, it's all over the board here, Sethi. It was more consistent beforehand, then it plummeted. Okay. Interesting. All right, let's go on to the... Oh, wow, look at these shares outstanding, Seth. 734 down to 573.
Mo, are you seeing this?
Wow, that's a 25... Is that 25% drop in shares outstanding?
Check, please.
That's incredible.
Mo, any guesses on what kind of company this could be yet?
I have no idea yet.
I do think it's tech.
It has to be somewhere in that area, but I just can't figure out. I don't even have an inkling of what it could be at this point.
Oh, how can you analyze a company without knowing what it is the real question.
That's a good question, and it's very easy. $1 of cash flow, whether it's from tech or from, dairy, is the same dollar of cash flow. Now, does that mean that I'm taking the same multiple? No, not necessarily, but it's still $1 of cash flow. I can still buy $1 worth of stuff with $1 of cash flow from wherever it came from.
I have conversations with normal folks.
You can come from your arse, and it's still going to be the same dollar of cash flow.
And I use this term, a dollar bill is a dollar bill, and whether it's in a Tesla or in something obviously a little more well thought out, and folks can't quite grasp this. They'll say,
well, that's because folks are stupid.
You know what they say, Paul, is, I only put a couple $1,000s in Tesla hoping it'll be a banger. It's like, okay, well, it's amazing what a couple $1,000s can be. If you put it in the right spot, what it can do for you. So,
yeah, and if you do that over and over in the wrong stock, you lose tens of thousands.
Shares outstanding is going way down. That's nice to see. Let's keep going, Paul. Now we move on to the...
Well, I want to look at the total life. So the 5-year average free cash flow was 9.7 billion, I believe. So multiply that by 5, and we are at 49 billion dollars. So we want their total long-term liabilities under 48 billion, and the very easy reason is a company with less debt is more likely to stay in business than a company with more debt. And I have found that it feels comfortable paying as long as the long-term liability is less than 5 times the average free cash flow of the last 5 years. So you have the long-term liabilities.
Yeah, right here, Paul.
36.9. Perfect. That's a check mark. Way lower than the 48 or 49 billion I came up with.
If you're in love with the software behind Paul, he'll tell you how to grab it right now.
Guys, our software was made because our users requested it. They wanted to see how we analyzed it. Now we're making the software the hub for everybody to learn about financials. And with the software, that's what you get. You get our mobile app. You get the 8 pillars. You get the 30 years of financial data, stock analyzer tool, exclusive daily content just for our subscribers, access to all of us, all of these things, including the Discord community, which is most important. Over 6,100 people are in there right now that are like-minded investors who you can talk to about all your ideas. How much is this? 87 cents per day, less than a cup of coffee. Our competitors are $1.99, $1.99, and $35, and they don't give you everything we get. This is a no-brainer, guys. If you're serious about investing, this will pay itself over hundreds and hundreds of times in your lifetime. Don't be foolish. Get the software today.
Okay, Paul, let's get after pillar number 7. This is the most important free cash flow growth over the past 5 years. And go ahead, Paul, take it away.
Okay, so we're looking at cash from operations less their capital expenditures. So we're at 9.8 billion down to 8.9 billion. So that's an X.
Not growing.
No, it's not, but it's very stable over the last 5 years with an average of 9.73. So what we're going to do here now is take 9.73, multiply it by an arbitrary 20 times. So we want to pay roughly $194 million for this billion dollars for this company, and it's currently 122. Was that what it was? What was the market cap of the company? 122.
Very good, Paul.
So that's a check mark there. Now the question becomes, what company is this? So far, from an 8 pillars perspective, I like it. It seems like it's boring, not growing a ton. People aren't going to like that. So something tells me it's going to be cheaper or people are going to be negative on it.
Yeah, here's your 8 pillars behind you, Paul.
Okay, there you go. Wow, 12 times free cash flow over the last 5 years. I'm not worried about this one so much. So, okay, so what company is this? Geez, am I right about it being in tech?
No.
Wow.
People are interested in this because it's been hammered of late, just of late, with a big drop in the share price.
I don't see that.
Mo, what do you see over there? Am I wrong?
Well, I'm trying to think of a company, because the numbers didn't help me. They didn't help me guess. So I'm thinking of a company that didn't get slaughtered in COVID, because this is not the drastic fall that you typically see, and a company that's rebounded and not really done anything. And I really can't think of it. But from a teaching perspective, let's zoom in and see. This is right now, it's a dog stock. It has had the decline down through the sweet spot, and now it's just on the bottom, coasting sideways, looking to rebound. Nothing's ringing a bell for me, Seth. So the good looking thing about this stock is if you just, look how consistent the volume is. It's every day it's getting really great volume. Now, the bad news is you're under our 4 major moving averages right now. And like you just said, it's been beaten down a little bit. I don't know the reason, but it really doesn't matter. Whatever this is when we find out, I think this is something that you should keep on your watch list. This could be a great swing trade, might be a good long-term play, but I love how consistent the volume is over, a 6-month period. You don't see that very frequently unless it's like a big FANG stock or something like that.
All right, Paul. Did you cheat at all?
I did not.
What should we put in here for folks? My apologies. We're going to use our stock analyzer tool to figure out what you should be paying for this company that you still don't know what it is. And Paul's going to tell us what we can be inputting this. You get this with our software. Go ahead, Paul.
2, 3, 4.
2, 3, 4. Share change?
-2, -3, -4.
Okay. Profit margin?
24, 25, 26. 35, 37, 39. I don't like the growth rate, so I'm going to go
lower PE.
I would go lower.
I'm going to go 12, 14, 16. Perfect. Same with price of free cash flow. Well, not 1,460. There you go. That's probably better.
Not Tesla.
Wow. 12, 14, 16.
And then 15%, 12.5%, 10%.
15. What did you just do, Paul?
So I made my assumptions on what I want to assume for this company based on what I think to be conservative numbers. That way I can determine what to pay. So you hit the analyze button.
Current price is 214.
Oh, okay. So it could be a justifiable buy right now if I like the company. Wow, what company is this?
I don't know. The slowing growth is the only thing that makes me think like, what the hell is this?
I have no
I really don't
clue
know.
whatsoever.
No, I don't know.
Mo, I think you'll be pleased.
Am I?
This is Amgen.
Oh, wow.
Oh. So it's funny.
Oh, I heard you say Amgen earlier. Darn.
So it's funny. I did start thinking. I was thinking it was maybe. I started to look if it was Biogen, because
you had an inkling?
It had drug company traits, but then I was starting to look at the chart and be like, am I seeing the gaps all over the place, this and that?
So down 20% since May.
Oh, wow. Now the big key is, remember guys, for drug companies, what do we care about?
Pipeline.
We care about the pipeline. So before you go out and buy this company, make sure what their drugs they currently have are going to be stable enough to and have long enough patent life that they can get their pipeline going and make sure their pipeline is good. What's a good pipeline? One with a lot of phase 1, phase 2, phase 3 drugs in them coming out. More phase 3, the better, because the ratio, the percentage of their likelihood to come to market are good. So pharmaceuticals all about pipeline.
And it's not really surprising that this growth is slowing. I mean, Amgen is huge. They're one of the leaders in the pharmaceutical industry in the world. So
what's their biggest drug?
You're going to probably look at it and it'll be very obvious, but I can't remember off the top of my head.
Ipogen and Arazem, these are flagship
Neupogen?
drugs.
I know Neupogen because of
red blood cell boosters.
Because of Dad.
Yep, they're big in the cancer space.
Yeah, because hematology and oncology, Dad's big on that. I know Neupogen.
Yep.
All right, so
final take on Amgen, Paul.
I mean, if I like the pipeline, I'm liking the stock where maybe I'm selling puts on this thing also. Maybe I start initial position now and sell puts on it. If I like the pipeline.
Yep. And
very key here.
A big thing is patent expirations. I mean, with companies like AbbVie and stuff, we're seeing right now that their patents are going to start to expire on very, very large revenue driving drugs. That's an issue. So got to pay attention.
That's our take. Always interesting, folks. I'm playing you, the viewer. I'm here watching these guys live to do this, and it's always intriguing. This is a language. If you want to learn it, you need some practice. We have 950 odd videos and a community of 6,100 people that can help you. So stay tuned. Keep at it. And next thing you know, you'll be telling your spouse how you're getting better at investing. You'll be telling your family members, and you'll probably feel alone, Paul, because value investing doesn't sound like everybody else. Right?
Well, that's the reason why value investing works over long periods of time, is because times like today, everybody says it's dead. Okay, it's dead.
That's our take. Fondle the thumbs up. On the way out, join the community below. See you next video.